Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar rallied to its target of 66 figure 30 last week as the US dollar continues to decline. And from the rally on Friday, the market was left a bit mixed after posting a bearish gravestone doji on the daily time frame. This suggests a potential weaker start to this week. After experiencing a significant rally, we can see the market bulls may take a little bit of profit as we are around this 60-day moving average. And as we can see here back in January, there was some profit taking evident. The US dollar, which measures the greenback strength against a basket of 6 major currencies, slipped lower on Friday to 102.66 after a mixed US jobs report. According to the US Labour Department's February non-farm payrolls report, payrolls growth surpassed expectations, reaching 275,000 jobs. However, there was an unexpected increase in the unemployment rate from 3.7% to 3.9%. Also last week, Fed Chairman Jerome Powell indicated that the central bank's readiness to cut rates was more on data release, as the market now looks to this week's US inflation, which still holds around 2% for the central bank's target. Despite the robust jobs report, traders continue to lean towards June as the likely timing for the Fed's rate cut. However, some are wagering on a rate cut as soon as May. So as we turn back to the technicals, we can see the market is pulling back slightly from the overbought conditions, and with the indecisiveness, that is from this gravestone doji, could see a pullback towards the support area anywhere from 65.85 and maybe finding a base around 65.45 where I've outlined. But this pullback is only likely to be temporary and therefore could see another challenge towards that top side around 66 figure 30, and a break there would lead on towards 67 cents. Turning our attention to the euro, well, the market is somewhat mixed after posting a long-legged doji. Nevertheless, an ADX is still supporting to a bullish case, and with the RSI slightly overbought, we could see a small pullback, but I feel the market will find support around 108.7080, and from there could see another bounce and look towards this top area anywhere from 110.15 to 110.65 and reassess. The dollar yen, well, you can see here the market is just plummeted all the way and nearly now capturing the level of 146.35.45 after posting it today an intraday low of 146.53. The market is somewhat oversold, so we could see a little bit of a mixed price action, but still continue to be on your guard and regularly reassess positions and adjust strategies accordingly to navigate market uncertainty. The reason why I say that is if a break of 146.35 would see a very steep drop and see the market plummet on towards the region somewhere around 145.25 and reassess from this point. It will be a bumpy ride if it does break this level of 146.35, but nevertheless a strong ADX, a heavy MACD, may drag this market lower, and therefore the bears will continue to ride all the way towards this bottom side before rebounding. Any upside attempts in the intraday views a cap around 147.30.50. A very impressive rally for sterling, but the market breaks above this 127 area, has now pushed on and destined to the challenge of 129.25.35. Reassess from there, we could see profit taking because the fact that we didn't see any back here when we did see the break of 127, but we are getting to the extremes and at the top side of the range. Therefore, anywhere from 129.25.35 could see profit taking return. This week, besides the US inflation data, the UK is looking to post its GDP and its employment data. So keep an eye on how the market challenges this topside level. And traders should still remain vigilant and reassessing their positions at key levels and adjusting their trading strategies according to their risk management. Any pullback, support seen around 127.70. A very impressive rally for gold as it sets another all-time high on Friday, briefly touching 2,200 before pulling back. We can see here that the market is now likely to stage somewhat a mixed price action due to the fact I have little view on the top side due to the extreme overbought conditions. But the pullback could be as deep as 2,144 to 46. We have an overheated ADX and in extremely overbought conditions in the RSI, so therefore does warrant this pullback. Talking of pullbacks, we've got a posted engulfing candle when it comes to oil, and therefore the market's topside target of 81.3 is paused as we now look towards the support area of $76 a barrel. The market needs to hold there to get a bounce back towards its topside objective around 81.83. Otherwise, a break of $76 a barrel would expose the region somewhere around 73.65 to 85. Well, that's a wrap for the start of the week. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.